It's not just short sellers that are out for Tesla, but a whole host of people from naysayers to media outlets seemingly trying to discredit Elon Musk and his companies. Tesla stock is already down $216 per share this year alone, which is a 54% drop, making it easier for the pessimists to make it seem like something is wrong with the company. But interestingly, as pointed out by the user Strength Plan on Twitter, at some point during the year, Tesla stock actually finds itself down roughly 50%, and this has occurred every year, at least for the past 4 years. However, despite these large drops, if you look at the same stretch of time in its entirety, Tesla stock is still actually up about 10 times even at the current low, and 20 times when it was at the highs, generously rewarding long-term shareholders. During short slivers of time, anything can happen, and stock prices can fluctuate due to noise of the future cash flows. And so if the stock is down due to the mechanics of the stock market, it's usually a short-term phenomenon as the market readjusts when consistent earnings solidify the trajectory of the company. At the same time, the media has the ability to insert fear into the market and attempt to associate and intertwine short-term stock performance with recent events. Investors typically worry about negative headlines and will sell whether or not the news is right or wrong, and they'll only ask questions later, at which point they may change their minds, especially if the backdrop turns out to be incorrect. Take China, for instance, which is a significant part of Tesla's business. Last month, Tesla cut prices in China to better align itself with EV incentives. Tesla can do no right when it comes to pricing. If they raise prices, people start to worry how that will affect demand, and if they can keep up with inflation from raw materials and other components. And if they lower prices, people start to worry that there is a demand problem. Couple that with the fact that the stock is already down, and so the cause of this decline must be due to softer Chinese sales.
Tesla's nosedive from 385 to 169 seems to be ongoing. Now that CEO Elon Musk is in self-administered Twitter purgatory. He needs to use his Tesla shares as a piggy bank right when the company is being raided by softer Chinese sales.
And indeed there are rumors from Chinese website Sina Technology News that references the founder of AutoFans, who stated that Tesla's recent price cuts only increased demand by 50,000 units instead of the expected 100 to 170,000 units that were rumored. And then in another report by another Chinese website, they stated that Tesla would need to use another price reduction method by year end to boost sales since their increase in orders was still lower than expected. Tesla China has denied these rumors, but of course the company itself is not as credible of a source as a third-party website referencing what someone else said about a different rumor. Now that said, Tesla typically does offer some sort of year-end perk to more seamlessly get people to take delivery at the end of the year, but this is a little different than softening demand for Tesla's products. However, the user The Accountant on Twitter aggregated data showing the first 2 months of sales out of China for the past few quarters. According to these numbers, Tesla's current China sales have already surpassed the volume from the first 2 months of any quarter in Tesla's history. And not only that, but the snapshot was taken on November 20th, which still leaves 10 days in the month, making room for the new record to be higher by an even wider margin. It should also be noted that one difference between this data and the aforementioned rumors is that this is estimated based on insurance registrations in China, whereas orders are just a guess since that's internal to the company. Now today we got a report from Morgan Stanley's Adam Jonas, who said that the decline in Tesla has gone far enough, pushing the stock towards his bear price target of $150 per share and presenting an opportunity to investors at a bargain price. At the same time, Citi upgraded Tesla from sell to neutral, stating that the 50% drop has balanced out the near-term risk/reward. This news may have caused the stock to jump almost 8% today, or it could have just been random. But it's interesting that China demand rumors are still the focus for most of these analysts. What if they turn out to be wrong? Tesla's Giga Shanghai factory has been shut down on and off throughout the year, and so if they can have a mostly uninterrupted quarter, combined with the continued ramp-up of Giga Texas and Giga Berlin, which is typically overlooked, then Tesla as a whole, which is what matters, could still have blowout deliveries higher than we've ever seen before. Now, some media outlets continue to try and put the damper on Tesla. Yahoo, along with other websites, were really pushing the narrative in the last 2 days with regards to recalls from Tesla. There was a flood of recall-related articles making it seem like this was a huge issue, even though it's completely irrelevant. If you recall earlier this month, Tesla recalled 40,000 Model S and Model X vehicles for a potential reduction or loss of power steering, and 53 vehicles with a side mirror installation issue. And then just a few days ago, another recall of 30,000 Model X cars due to an airbag deployment issue, followed by a recall on November 19th when Tesla recalled 321,000 Model 3 and Model Y vehicles due to an intermittent taillight issue. Now, most of these issues are fixed with a simple software update, so no need to bring the car in. It's as easy as updating an app on your phone, and for most people, this is likely fixed even before they realize that there's a recall. Most of these recalls are glitches that Tesla fixes and voluntarily issues a recall, which is the current method that frankly doesn't make much sense since the consumer doesn't really have to do anything. They don't need to bring the car in, and therefore they're largely unaffected. Now, some of the major headlines highlight the large number of cars that were recalled, which sounds like it would cost Tesla a lot of money to fix, but in fact it's basically nothing. Or that this is Tesla's 19th recall of the year, and that's the least of shareholders' headaches. Well, indeed it's not a concern at all. Actually, Tesla only has 19 recalls this year, many of them simple software updates, but this puts them near the bottom of NHTSA's recall list, with companies like Ford having 63 recalls this year, Volkswagen with 42, and Daimler with 38. It's also funny that as of the start of October, Tesla had a total of about 3.2 million cars on the road that the company has ever produced in its history. Yet on the NHTSA website, over 3.7 million cars are said to be affected by recalls, so about 115% of Tesla's existing fleet. If a single car has 1 million software issues, does it get tossed into the recall pool 1 million times? It should also be noted that even physical recalls are usually not a big deal, unless it's something at the magnitude of Toyota recalling and offering to buy back their EVs over the risk of the wheels falling off. That likely still has little effect on Toyota's overall brand. It's better to be safe than sorry by voluntarily recalling necessary vehicles, and consumers will respect companies more for that rather than not recalling something where there is indeed an issue. So the recall is the right thing to do, although software updates should perhaps be separated from physical recalls to avoid confusion. It will likely only change when the traditional OEMs start to do more software updates that are considered recalls. But in terms of over-the-air software update recalls, a better measure may be the actual time it takes to fix the issue stated in the recall for the consumer. For instance, Ford issued a software update-based recall back in June, and only about a month later was there a software fix for it, but weirdly only available at dealerships. This is a hassle for both consumers and for the dealerships. Tesla usually issues their fixes over the air rather promptly without having to waste consumer or service center employee time. In Ford's case, they told consumers to wait months until July or August for the over-the-air software update to be ready. And correct me if I'm wrong, but there still doesn't appear to be any update about this being ready yet, showing a lack of software ability at Ford. Something like this could actually begin to hurt the brand if it annoys consumers, versus the seamless experience of not having to go anywhere and the car fixes itself right away. Now, diving further into the Yahoo Finance coverage of the Tesla recall, they start by saying, well, there's more trouble for Tesla this morning as Elon Musk continues to divert his attention to Twitter. Now, in reality, there's no trouble, and Elon Musk isn't actually diverting his attention to Twitter. If previous to the acquisition, he was spending roughly 50% of his time at Tesla and 50% of his time at SpaceX, we'll ignore Boring Company and Neuralink, for which he said in the past only take up single-digit percentages of his time, then what he's done is he's basically added on Twitter to his workload. Now, these are rough numbers to illustrate that it's a misconception that Elon Musk has diverted away his attention from his other companies. He's instead increased his hours from 80 hours per week to 120 to make sure everything gets done. Also, Tesla has over 120,000 employees helping him out, and the 50 that he brought over to help with Twitter were volunteers working after hours. It's unlikely that anything related to Twitter affects Tesla's actual business. If anything, it may bring more attention to Tesla, which could boost orders. Now, in the conversation between Yahoo Finance hosts, they say that this recall is a problem for the company as they try to ramp and grow their production. They state, "So as you try to ramp up and build more, you're going back and having engineers and people like that work on these recall issues." They say, "A lot of investors are concerned that maybe he should be back at Tesla to monitor these things and make sure that the production ramp-ups go okay and there's fewer and fewer recalls." Now, first of all, it's not possible for Elon Musk to monitor recalls, whatever that means. The code is changing so often that no one person can keep track of everything that changes. Secondly, it's incorrect to say that this affects their production ramp. This software is decoupled from the hardware in that Tesla can ship as many cars as they like, and sure, they may be affected by the recall, but again, they all accept software updates that can be done later. So this in no way is slowing down production. It also doesn't really take up any more time than usual for Tesla's software developers since they're constantly fixing bugs anyways, and they have a quality assurance team to make sure nothing gets through to consumers. Some of the things that do get through likely end up as recalls or go unnoticed as rare edge cases or non-critical issues, which may get fixed by future updates. It's impossible to actually verify every single possible edge case, but Tesla is said to have a massive automated test suite which should catch the majority of software issues. When they do a release, all of the tests have passed, and so something that triggers a recall may not be very common anyways. Nevertheless, from the consumer's perspective, it's the speed at which an over-the-air software update can be deployed to quickly fix any recalls and preventing them from causing issues for customers. So do you think that over-the-air software updates should be classified as recalls, or how can it be done better, especially if the fix is ready before the consumer even notices? And stop using Yahoo Finance. Instead, check out our website, themarketisopen.com, for instant stock quotes and financial data that's freely available. Please hit the like button and subscribe. We would really appreciate that. And a huge shout out to all of our patrons that helped us support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.